Hello everyone, welcome to Just Invest Today, and today we have a new video with Monish Pabrai and the Investors Podcast. This just came out fresh out the press, April 23rd, 2 days ago. So this is an amazing video. Monish Pabrai talks about a lot of subjects. He talks about racism, inflation, about his daughters and her advantages and his biases, everything, man. So go watch the original video. But in this video right here, we're talking about Alibaba, we're talking about Tencent. Basically, Mohnish Pabrai thinks Tencent was a better buy than Alibaba, so he kind of compares the two. So we're gonna get into it in this video because he talks a lot about kind of what's going on and how he sees things when it comes to Alibaba and Tencent. And remember, he did sell off Alibaba for a big loss. He did this all for a specific reason, and we really know that reason is tax loss harvesting. So let's get into this video. Let's hear what Monish Pabrai has to say about Alibaba, about Tencent, and kind of how he made his decisions. So I'm going to read some of my highlights from the Alibaba Tencent section. Basically, the host asks him about Alibaba and his thoughts on Alibaba and kind of why he sold. So Alibaba is an incredible, amazing business. It has done very well for a long time. After I made the investment, I was able to drill down my research in Tencent. And when I compared the two businesses, I thought Tencent was a superior business. So he sees Tencent as way more superior than Alibaba because it has a higher return on invested capital and they just use their money up. Like, they don't have this huge cash balance like Alibaba does because they invest in their software engineers and they invest in buying and owning private businesses. But do you guys believe that Tencent is a superior business? I'm on the edge of that. Both do well in their field and they're honestly different businesses kind of with different set of goals. Like Alibaba is all about e-commerce and building their cloud business. Tencent is building their cloud, but it's not as dominant. But their messaging, their WeChat, and their video game sphere is unheard of. It's unmatched. They both have their own type of brilliance. But what I'm thinking right now is that Tencent might get hit a little bit harder with the regulation because video games is kind of their bread and butter. And we know how the CCP is analyzing video games and how they're kind of switching that sphere up. I'm not sure how that's going to play out long term, but that's going to have maybe a little kind of hindrance on Tencent, whereas Alibaba, e-commerce is always going to be at the forefront of how the economy is going to grow. So the government won't have an issue with the e-commerce business. So just because the government regulation, Alibaba might be a superior business to Tencent. Who knows? Let's see how that plays out. Alibaba has gone significantly down from where I bought it at, and we want to do tax planning, tax loss selling, and buying back in 30 days. But in my case, I could sell Alibaba and buy Tencent. So he had to kind of think about selling his position and then kind of rebuying back into Alibaba, but he would have to wait 30 days and he'd be like, damn, no, like what if it just runs up, which actually it didn't happen. But he's just like, why don't I just sell Alibaba and buy a superior business like Tencent? So basically that's what he did. Kill two birds with one stone. So he had the tax loss harvesting plus buying a superior business. Then the next question was asked about Tencent. Tencent might be the best business out of the big tech, and that's kind of the question Stig asked him about Tencent being a better business or superior business because they have the software engineer and they have that investment portfolio. But these companies gave me pause because they are mega caps. Anytime you buy businesses worth hundreds of billions of dollars, how much runway do they have? But Races we can see as a long runway, and Races is one of the business that he bought in Turkey, and he just has these high expectations for Races, and he keeps saying that Races is an amazing business that he's just gonna hold for 10 years. And the funny thing is that he says a lot of that stuff, like even like Seritage growth properties. He says that he's gonna hold these stocks for so long, but you just have to take his opinion with a grain of salt because he says one thing and he does another. Like he said the same thing about Seritage and a lot of these other companies that kind of didn't pan out. So when he says he's gonna hold these companies for this type of time or this amount of time, just don't really take that as gospel. Basically, is what I'm saying. You can do well with Tencent and Baba, but they already have a huge size and scale. Keep that in mind. Tencent has an army of software engineers and able to move anywhere, plus returns on capital. Dominant in video games and messaging. So that's what he really likes, is that Since this fear of the whole tech crackdown is happening in China, Tencent is able to kind of move around those software engineers and do other things. So that's what he kind of loves about Tencent. They have been good at taking the excess capital and building a second leg. Most companies don't have investing prowess. Buying into amazing private businesses using excess cash with high returns, 30 to 40% on invested capital. But one of the things that come up is the Chinese government considers all of this wild, wild west behavior not acceptable. Most businesses are very fragile. If you start shaking the core business, most will have a hard time. Both businesses need to understand the new landscape. So both Alibaba and Tencent need to understand the new landscape of how the tech crackdown is happening in China. And he thinks that these two businesses are going to be able to sustain their core, even though they have to adjust to the new landscape and kind of shift around their business. As he says, Tencent is going to go probably more global and kind of go into fields that the government likes, and Alibaba is still going to be doing what it does, plus going into fields that kind of the government likes, like cloud computing and like chips. So he's saying that these companies probably won't have problems because these are not like fragile businesses that can just get killed just because of the government wants them to do this or do that. So that's what he's basically saying about Alibaba and Tencent. The host asked him about the VIE structure and the delisting risk. I don't think one needs to sweat that. I don't have concern about the VIE structure. If investors run into issues, it will be because of the core business, not the structure. If investors are right about the core business, they will be fine. If investors are wrong about the core business, then they will pay the price, basically is what he's saying. So he's not worried about the VIE structure. He doesn't think the government is trying to kill the companies, or people are thinking that, oh, the delisting is going to happen because the government wants it. He's saying that the government is willing to work and it's working with the US government, which is at his surprise that they're actually doing that. He has no concerns over that. And in my opinion, man, I just showed you that ED.com is actually going to do a special dividend. Plus Tencent already did a special dividend. If you didn't own the stock, how did we get that money? How did we own some of the earnings of Tencent releasing that dividend? So that just shows you what people say about VIE structure is just completely wrong. We do have ownership of the company because we are getting a dividend. I got the dividend in my account. So with that being said, there's so much potential here. There's so much potential for Baba and Tencent. Do you think Tencent is a way better company than Baba? Because that's what Monish Pabrai thinks. And man, Baba has been growing. Like, think about what's happening in the market right now. Let's do a quick analysis. Baba is growing, they grew 52% in 2021. This is a business growing rapidly still, year after year, not quarter after quarter. But people are treating the stock like it's a freaking nothing. Like, it's selling at $225 billion market cap. It already has like 77 billion of cash. That's like 30% of the freaking market cap in just cash. And they're buying back $25 billion? Like, what? How is this even possible? But the market can be very irrational during these times. Don't look at the stock market. The stock market does not tell you what the intrinsic value of the actual business is worth. And Baba is growing internationally in Turkey and Southeast Asia. Like, I still think Baba has so much potential. It's just mind-blowing how the market treats it. 52-week low, $73. 52-week high, $239. That just goes to show you how far the market is off and how irrational it is. So guys, can you please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace.